we need to talk ASAP. We have massive catalysts coming over the next 24 hours or so, really that you need to know by tomorrow morning, that has the potential to crash the markets or send stocks to new all-time highs. And yes, we're going to break down Nvidia's expectations for earnings and why Nvidia is so important to the markets. This has never happened before, where one stock caused your bears to capitulate and turn positive. Just like that. May hit, Nvidia reported earnings, and nobody was bearish anymore. At least that's what it felt like. We need to break down everything you need to know. I think it's also imperative that we break down exactly what kind of effect Nvidia's earnings could have on Tesla stock. Tesla has been another beneficiary of Nvidia's last earnings report. This will have specific implications for AI companies and also implications for the broader markets, as we will talk about in this video. So let's start with that. Expectations for Nvidia earnings. Currently, market makers are expecting Nvidia is going to move up or down $47.79 per share by the end of this week. So roughly a 10% move is priced in to the upside or the downside. So it's not like we're expecting a small move. The market makers are actually expecting a quite substantial move from Nvidia. And it's all about one thing in particular. It really comes down to the guidance. And we'll get into that here in just a moment. Why I say it really comes down to guidance, because I don't think Nvidia is going to come out and have bad earnings. That's not what I'm saying at all. It's possible, but I don't expect a huge miss to the quarter. I don't think anyone really expects that. But guidance will give the markets a glimpse on if this AI spending is continuing. And we're going to get into the numbers in here in just a second. But I do want to simply break down why Nvidia is so important. This has never happened before, at least from my recollection, where one stock pulled the markets out of a bear market that basically made all bears capitulate and had such a big effect on the markets. Apple does not have this effect on the markets. Microsoft does not have this effect on the markets. Companies that are 2 to 3 times larger than Nvidia's market cap do not or will not have the same effect as Nvidia. I've never seen this before. And this is why it's so important. So there has been 3 reasons why the markets have done so well in 2023. Number 1, and this is what a lot of people think is the reason why the markets have done well, or the biggest reason why, and that is the Fed's U-turn providing stimulus in the markets. When the banking crisis happened, the Fed opened up a floodgate of over $400 billion of liquidity to the markets. This caused an initial bullish response after this drop that we've seen in March. This got the S&P from about 377 back up to about 410, roughly in this range. The second reason why stocks rallied, and by far the most important, was Nvidia earnings back in May. Nvidia reported their blowout quarter back here on May 24th. Where were the markets on May 24th? Well, the S&P 500 was trading around 410. What happened? Well, the next day following Nvidia, markets rallied 0.87%. The day after that, up 1.3%. The day after that, flat. Slight drop after that, up another 1%, and it was off to the races after that. Why? Because investors started to say, hey, there's an AI revolution going on here. And this is going to add massive spending, could help us avoid a recession, and, well, maybe this is the real deal. Some people have said this is as big as the internet's creation itself for the long-term future of humanity. That sounds like a very bullish event. And who knows if it really is going to be that impactful or not. I would say probably. Give it enough time. 10, 20 years down the line, a lot of our life is going to be affected by AI. That's certain. I'm not going to discredit that at all. But that's really the moment where markets said, hey, this is no longer a bear market. We are going to buy the dip and we're not going to look back. If we were a bear for the last 2 years, we are no longer a bear after Nvidia's earnings. That's what happened. Now, the third reason why stocks have done well in 2023, which isn't a huge deal, I don't really think this is as important, but this is what a lot of your experts and analysts will say. Well, earnings have been good. And on a year-over-year basis, most companies have not done well. Apple's down year-over-year. AMD, down year-over-year. A plethora of other companies are not having great earnings, but they're better than feared. So it all comes down to market expectations. And that's why tomorrow will be so important. If Nvidia comes out and reports good earnings, pretty decent earnings, well, that's great. But it's all about the guidance. We don't care as much about what happened last quarter as what we care about for next quarter. And the problem is expectations are very high for guidance for Q3. Guidance is the whole reason why Nvidia rallied back in May. Markets were expecting around 8 billion for a guidance number. And Nvidia said, no, our business is doing way better than that, and guided for about 11 billion. Well, Wall Street is expecting 11.1 billion when Nvidia does report earnings. And then Wall Street is expecting guidance for next quarter at 12.56 billion. You're expecting huge revenue growth year over year. If Nvidia earnings come in at 11.1 billion, as the markets are expecting for this quarter, that would be year-over-year growth of 65%. That certainly makes sense why markets rallied off of this. Yeah, I would agree that rally with Nvidia was probably warranted. But if guidance does not come in over expectations for next quarter, that's where the real problem is. We're expecting margins to be slightly down. We're expecting costs to rise a little bit. I don't think that matters nearly as much as the guidance. And let me tell you why. If you can just grow revenue at such a large clip, like we've seen with Meta earnings. Meta earnings, well, they guided for way higher expenses, like 3+ billion more in expenses than we were expecting, presumably going to lower margins over the next coming quarters. But Facebook beat expectations, or Meta beat expectations. So the stock still went up after earnings. I don't think any of these other data points matter as far as moving Nvidia's stock relative to the guidance. Now, according to the Wall Street Journal, today, Tuesday, in trading, you've seen, quote, bullish Nvidia bets explode ahead of earnings. It looks like option buyers are betting that Nvidia could rally to $500 or even as high as $700 following earnings. This would be much more than the expected move of about 10%. Or $47 or so. Now, just take a look at what the analysts have been doing recently as far as their price target increases. Chris Casco from Wolf Research did not have a price target on Nvidia. He initiated coverage with a buy and a $570 price target. Barclays raised their price target from $500 to $600. Sequoia, I can never say this firm, so bear with me if you ever hear that in the future. I don't know how to pronounce this properly. They had a price target of $450. They raised that to $575. This was on July 20th, so about 1 month ago. All of these price targets, I should say, are from 1 month ago until as recently as today. Mizuno. I can't say that one either. I don't know why these pronunciations have to be so complicated. Had a price target of $400 and raised it to $530. And UBS had a price target of 475 and raised theirs to 540. Wells Fargo had a 450 price target and raised it to 500. This was August 15th, so now we're getting a little bit more recent. Bard had a 475 price target, raised their price target to 570. Piper Sandler raised their price target from 450 to 500. Raymond James increased their price target from 450 to 500. Oppenheimer raised their price target from 420 to 500. Rosenblatt raised their price target from $600 to $800. What? That's insane. Matt Bryson from Wedbush initiated coverage with a buy and a $490 price target. KeyBank increased their price target from $550 to $620. HSBC increased their price target from $600 to $780. BMO Capital yesterday raised their price target from $450 to $550. These last three price target raises, from $550 to $620 from KeyBank, HSBC from $600 to $780, and BMO Capital from $450 to $550, all of this happened yesterday. So like very recent, very, very recent, right before earnings, after Nvidia's trading at all-time highs. Either you know something or you are putting your career on the line. That's the ultimate bottom line here. Now, based on how Nvidia has reacted recently as far as trading, again, at all-time highs, Tesla stock has started to recover off the lows. A lot of other AI stocks have started to do well. It looks like the markets are expecting great things from Nvidia. And I'm sure Nvidia does give us great earnings. I'm not going to discredit that, and I'm not going to bet against Nvidia. If anything, I'll buy calls on Nvidia because of some of this we're seeing. So, by no means am I saying that you should short Nvidia. That's probably a recipe for disaster. But what I am going to say is the expectations are probably too high. And unless we get a big guidance raise, the stock's probably not going to do well following earnings. Now, again, it's possible. Nvidia could come out and give us a $15 billion guidance number. If that happens, Nvidia is probably going to $700 per share. And this kind of volatile bull bear market is over, and you have really hit a bottom in October, and you're probably never going back to those prices. And you should buy the dip wherever the dip is. Everything would do well at that point, is what I'm saying. Especially stocks that really feed off of AI and the AI kind of hype, those would do much better. So based on this, I want to think Nvidia is going to have great earnings and the stock's going to soar. Because based on some of the trades we're seeing, based on some of the price targets, that's what it looks like. But you really need to see a huge guidance raise for that to happen, in my personal opinion. Let me know down below in the comment section, is Nvidia going to give us a massive guidance raise, or was this AI kind of hopium? Hype? I don't know what wordage to really put here because we don't have enough clarity. Last quarter, was that temporary or is that going to last a while? And are we going to get a massive guidance raise? And again, Nvidia reports earnings tomorrow in after hours. If you guys want to come trade with us, come hedge out your portfolios, come make some long bets, maybe get a little bit crazy with it, link down below in the description of this video. I post all of my trades every time I make a trade in Tesla or any other stock, option, or crypto. Well, in real time, almost every single day. Whenever there's a good opportunity, we like to take advantage of that. So come join us down below in the description of this video. Now let's get into exactly how Tesla stock could move following Nvidia's earnings. If Nvidia comes out and gives us a $15 billion guidance for next quarter, keep in mind analysts are expecting around $12.56 billion. So this would be guidance raised about $2.5 billion higher than expectations. Well, Nvidia's stock's probably going to rally about 20%. 17 to 20% is what I would expect. What this effect will have on the markets, and on Tesla specifically will last weeks. And I would expect in that scenario that Tesla stock could approach that $300 level and actually overtake that. And I think this is probably a 15 to 20% probability based on some of the price target increases we have seen, based on some of the option activity we're seeing for Nvidia. That is certainly a possibility. What about the worst case scenario for Nvidia? Let's say numbers are okay, margins are kind of down again, like we seen last quarter. Nothing is really stellar or stand out compared to our expectations. Again, expectations are 11.1 billion for revenue. Nvidia gave us guidance last quarter of 11 billion. So the markets have already assigned a $100 million premium to Nvidia's earnings. So let's say Nvidia comes out at 11 billion. Again, margins fall, and you get guidance around expectations, around 12.5 billion. In that scenario, Nvidia probably sells off 5 to 10% because it just wasn't that stellar standout guidance. That would be a problem for the markets. What this would do for Tesla is probably send Tesla back down to about $200 per share, in between 210 and 200. That would be my expectation. Now, what if we get muted earnings? Well, muted earnings would come in the form of good numbers, slightly better beat to guidance, I would expect. If markets are expecting 12.56 billion, maybe Nvidia comes out on the high end at 12.8 billion, the low end maybe a little bit under markets expectations, around 12.4 billion. A lot of the time we've seen recently, companies are not just guiding super high. They're raising the high end, but they're also lowering the low end. So when it comes around to next earnings, it's easier to beat the guidance comp because, hey, they're saying, look, we could have great earnings or we could have great earnings but not so great next quarter. If you guys follow earnings, that makes a lot of sense. So I would expect a muted response from Nvidia. Up or down 3% would be my expectations. In that case, if Nvidia is down 3%, it's going to have a negative effect on the markets, but it's not going to be this huge crash event. I would expect Tesla would really trade in between about 220 to even back up to about 240 in that kind of scenario. And again, I do think a stellar guidance raise and earnings from Nvidia, call it about 20% chance. I think there's about a 20% chance we get kind of muted earnings where everything's great. Nvidia raises the higher end, they lower the lower end to keep market expectations tame, and the stock is up or down roughly 3% either direction. Kind of muted relative to the 10% expectations market makers have for the movement of Nvidia stock following earnings. That's what I mean by muted, just so you guys know. Expectations 10%. If Nvidia moves 3%, that's a muted earnings. If you bought calls or you bought puts, you lost on both sides because there wasn't that oomph that you seen last quarter with Nvidia. Now, personally, I think there's about a 60% chance Nvidia could move down 5% or more following earnings because typically when everyone is bullish, like you were seeing with Nvidia, and price targets within the last couple of days being risen to $800 when Nvidia is currently at about $460, $470, that is usually setting a company up for failure, or not even failure, but a disappointment relative to expectation. So there's that chance. I want to assign a larger probability to an upside move just because analysts have been raising their price targets really high over the last couple of days. It makes me think that they already know earnings are going to be really good. So keep that in mind. These probabilities come out of thin air. I'm just making them up. This is kind of the way that I am looking at this situation. I could be right. I could be wrong. I'm going to position my portfolio to benefit either way. That's the beautiful thing. That's why you should never listen to me or anyone else when it comes down to earnings, stocks, investing, how to invest your money, how much to invest your money, so on and so forth. But if you guys want to come trade with me live in real time, maybe get your feet wet in some of these trading opportunities that could yield out massive profits, check out that link down below in the description of this video, like I mentioned in the prior 5-10 minutes or so. So that's going to do it for this video. Let me know what you think about Nvidia earnings, how Nvidia is going to move following earnings, what effect this will have on the markets, as well as Tesla stock. Thank you for joining. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. My name is Michael Tyler, and I will see you in the next one.